A massive crypto dump could be coming and FTX might be restarting. This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. JP Morgan Chase CEO Jamie Dimon dissed Bitcoin, yet again, on the sidelines of the World Economic Forum's annual summit in Davos, Switzerland. In an interview with CNBC, Dimon said Bitcoin itself is a hyped-up fraud, it's a pet rock, making it clear once again that the top executive doesn't care about Bitcoin. Dimon also questioned its 21 million coin cap. The banker said, "How do you know it's going to stop at 21 million? Everyone says that. Well, maybe it's going to get to 21 million and Satoshi's picture is going to come up and laugh at you all." This is not the first time Dimon has criticized Bitcoin. The CEO declared in 2021, "I personally think that Bitcoin is worthless." He also referred to Bitcoin as a terrible store of value in 2014. He predicted its demise a year later. But the banker is aware of the value of the technology.
No, that's different. Blockchain is a technology ledger system that we use to move information. We've used it to do overnight repo, intraday repo. We've used it to move money. Right. So that is a ledger. That's a technology ledger type of thing that we think will be deployable.
It's not surprising, however, that the company behind the Federal Reserve, which plans to make their own digital currency, doesn't support a currency that they don't control. Natalie Brunell puts it well.
Bitcoin doesn't need Jamie Dimon. Jamie Dimon will need Bitcoin because his customers will demand it and he can make money off of it. Number two, we don't need big banks as friends, right? This is the whole movement. We want to eclipse the big institutions.
The token issued by the bankrupt FTX crypto exchange has jumped 32% in a day after its new CEO, John Ray, who took over FTX, has reportedly set up a task force to consider restarting FTX.com. Ray said that everything was on the table when it came to the future of FTX.com, including a potential path forward for rebooting the exchange. FTX.com was one of roughly 130 companies under the FTX group that filed for Chapter 11 bankruptcy in November. Ray reportedly considered reviving the exchange as part of its efforts to make users whole. According to the FTX CEO, he considered feedback from some stakeholders who saw the exchange as a viable business. Ray was reportedly assisted by Wang and Ellison in tracking down some of the company's assets, but he has frequently traded blows with Bankman-Fried. The former CEO claimed he'd been pressured by the law firm Sullivan and Cromwell and the FTX US General Counsel into naming Ray as the head of FTX prior to the firm's bankruptcy. Ray has also said Bankman-Fried no longer has any role at the exchange and cannot speak on its behalf. Sam responded to the news on Twitter yesterday saying, "I'm glad Mr. Ray is finally paying lip service to turning the exchange back on after months of squashing such efforts. I'm still waiting for him to finally admit FTX US is solvent and give customers their money back." Singapore-based exchange Huobi confirmed Thursday that Justin Sun, founder of Tron and one of the richest people in crypto, is not just a member of the Global Advisory Board, but is leading the exchange. Saying, "Under the leadership of Justin Sun, it can be said that Huobi has embarked on a path to rebirth." Sun became a Global Advisory Board member in October, shortly after the Hong Kong-based investment company About Capital became the majority stakeholder of Huobi, but it wasn't previously confirmed that Sun was in charge of the exchange. The timing has sparked rumors in the industry that Sun might be a shadow investor behind About Capital, but representatives for Sun had said that he's not an owner of the company. Sun himself has confirmed that he owns tens of millions of Huobi HT tokens. The exchange also addressed concerns of so-called rat trading. Rat trading is a form of front-running in which fund managers use personal accounts to buy shares cheaply, then sell them at a profit after purchases from the funds they manage have boosted their value. Huobi says they have a zero-tolerance policy for rat trading. The Polygon network is known for its various strategic partnerships building throughout the crypto winter, now partnering with Bitgo. Bitgo wrote it's pleased to announce the two new services for Matic holders, wallets and custody for native Matic, and a staking for ERC20 Matic. Previously, customers could hold the ERC20 version, but staking was not available. Now our clients have access to the full suite of our services. Chen Feng, the chief operating officer at Bitgo, said, "By offering more features to Matic, we're providing investors with a safer way to custody their assets and providing platforms with the tools they need to build the future." Cryptocurrency lender Genesis has officially filed for Chapter 11 bankruptcy in the Southern District of New York. The firm has estimated liabilities of $1 to $10 billion and assets in the same range, according to the January 19th filing. Earlier reports claim the company had been considering filing for bankruptcy protection if it was unable to raise capital to stem its liquidity crisis. In a January 19th press release, Genesis said it had been engaged in discussions with its advisors, its creditors, and corporate parent group Digital Currency Group to evaluate the most effective path forward to preserve assets and move the business forward. Genesis has now commenced a court-supervised restructuring process to further advance these discussions. The company's Chapter 11 plan sees it contemplating a dual-track process, pursuing a sale, capital raise, and/or equitization process that would apparently enable the business to emerge under a new ownership. The derivatives, spot trading, broker dealing, and custody business of Genesis are not part of the Chapter 11 proceedings and will continue operations according to the firm. They also claim to have more than $150 million in cash on hand that it believes will provide ample liquidity to support its ongoing business operations and facilitate the restructuring process. The restructuring process will be led by an independent special committee of the company's board of directors, and Genesis says the process is aimed at providing an optimal outcome for Genesis clients and Gemini Earn users. Gemini co-founder Cameron Winklevoss tweeted the bankruptcy is a crucial step towards Gemini users being able to recover their assets, but claimed DCG and its CEO Barry Silbert continue to refuse to offer creditors a fair deal and threaten to file a lawsuit unless Barry and DCG come to their senses. Both Genesis and Gemini are facing charges from the United States Securities and Exchange Commission for allegedly offering unregistered securities through their Earn program. Fears are mounting over Genesis's parent company DCG as it may have to sell part of its $500 million venture capital portfolio to try to offset Genesis's liabilities. Genesis Trading is actively transferring crypto assets to other crypto exchanges and wallets. Blockchain security platform PeckShield in a tweet disclosed several millions of crypto assets transferred by Genesis Trading. Genesis Trading transferred 75,000 ETH worth $113 million and 4 million USDT from its OTC desk to crypto exchanges Coinbase, Bitstamp, and Kraken. Cardano founder Charles Hoskinson confirmed interest in acquiring the crypto-focused media outlet Coindesk on January 19th. Hoskinson said Coindesk appeared to be overpriced for its $200 million asking price, adding that he would decide after reviewing the firm's books. Hoskinson said his media interest is broad as he's focused on how to get journalistic integrity again. He added that Cardano had received bad press in the past as certain media outlets had to push specific agendas, citing examples of how FTX funded the block. He argued that this could change if readers are financially incentivized to fact-check the media houses. Hoskinson also pointed out that readers could have a new way of interacting with news stories through non-fungible tokens. He said it would be really cool if each story could be viewed as a living object. Hoskinson said the incentives would prevent Cardano from influencing the media reports, as readers would actively question and interact with the reporting. The Cardano founder gave several reasons why he thought Coindesk was overpriced at $200 million. It would make sense to invest between $5 and $10 million to build a much more decentralized organization that would outcompete its rivals in the next years. Hoskinson said that Coindesk lacks a metaverse component and a really good video side, although he acknowledged that the firm was trying to build its video product but added that it was not very popular. According to Hoskinson, Coindesk could enter into several partnerships, citing how a partnership with crypto analytics firm Messari would benefit both firms. Crypto.com recently published a report about the 2022 crypto market. The research report found that the total number of global crypto owners increased by 39% in 2022, from 306 million to 425 million holders in the same year. Other key takeaways included a 20% rise in Bitcoin holders up to 219 million, as well as a whopping 263% increase in ETH owners, up from 24 million to 87 million. The report points to the merge as the main reason for Ethereum's accelerated growth rate. The merge, which marked the completion of the network's transition from proof of work to proof of stake consensus algorithm, and interest from institutional investors in the popularity of ETH liquid staking, also contributed to Ethereum's adoption. That's it for your Altcoin Buzz news update. I'm your host, Cody Buffington. Thanks for watching.